So let me go back from, talking death benefit legacy play. Let me go back to the very beginning and some of the evolutions I've had on the front end of considering whole life. I think in my early journey, it was everybody needs whole life. Like I already stated, like get rid of everything else in your portfolio and do everything in whole life. And it didn't matter even where you were starting. Like you could start with a small policy, like get your foot in the door so you get your whole life, which there's some merit to that because you're locking your insurability and some things like that. But what I've discovered, I don't want to say what I've definitely discovered, and you may agree with this, Matt, but is a lot of people aren't ready for that. They're not
Right.
at the financial place to be mature enough to handle a whole life policy. It's
Sure.
not the right thing for them. If they have debt, if they have a spending problem, if they aren't making enough money, you and I have done a lot of content on just increasing income. Sometimes we don't have a debt problem only. Sometimes we have an income problem too. And we got to get that part figured out. Figure out your
Yep.
business or figure out, your own personal value and your own self-worth and get those things up there to where the money's coming in that's in alignment with, who you are as a person. Like that's a whole nother video as well. But one of the things that, I probably turned away more people that have come to me, interested in the idea of infinite banking and stuff. And I say, hey, you're not at the place, you're not ready yet. You need to
Yep.
get your foundation in place first, which means having an emergency fund, which means having savings, which means, sometimes paying down debt first is a good thing, like getting rid of most or all of your debt before you even consider a whole life policy. And I know there's a lot of people out there, and I was kind of trained this way on the front end of my career was, let's not worry about all that stuff. Like, let's just get them into a policy because it's a sale, right? And you see this with IU all the time. Oh, you can do $50 a month, Matt. Like, let's get
Yeah.
you in, man. It'll grow to millions of dollars. And it's like, no, 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 no. We have a
Yeah.
fiduciary responsibility to do the right thing by clients. And if we have a sense that they're not in the place to where they can manage something like this, which is not even really any management to it, other than paying the premiums and making sure you do things that are going to advance you financially and not put you into a further debt cycle, because you can screw up a whole life policy by you
Sure.
can, leverage the heck out of it, taking policy loans. And if you miss some payments or something, like, hey, you can screw it up. And we don't want to put a client in that situation. We're not so eager to get a sale that we want to do that. We want to make sure, and we have part of Life 180, a financial hierarchy. We want to make sure that you have the foundation pieces set first before you even start looking at whole life. And usually that means savings and emergency fund and having insurance protections correct, like on your home and on your car and on your life, which may mean term life insurance. So that was, again, an evolution that I had early on. I was completely against term life insurance. Like, oh, it's terrible. It's a place that, only 1% of policies pay out, but it serves a function. It is still a
Sure.
financial tool that serves a function. I've since learned, and this is part of the evolution as well, that it's not just all term life are the same. There's something called convertible term life insurance. You can convert a portion or all of that over to whole life over time. There's things called living benefits term that gives you access to a portion of your death benefit if you have a chronic, critical, or terminal illness, which means if you don't want to go maybe for drugs and chemo and radiation, if you have cancer and you want to go to an alternative clinic, that alternative clinic's $250,000. Well, if you have a big enough policy, you could get an advance of your death benefit with living benefits, and you could
Yep.
maybe go get stem cell therapy or go wherever the heck you wanted to go and have a higher probability of, surviving something like that.
Yep.
And we talk in other videos about Chris from Life 180. His father-in-law went through that exact scenario. He's alive after a 90-day diagnosis with pancreatic cancer 4 years later,
Yep.
like still playing golf
It's
multiple days
incredible.
a week. Like he's still doing very, very well because of this exact thing. So that's part of the idea here is getting, your death benefit covered, having your life protected, having a lot of these things in place. And then when your finances are at the tipping point where, hey, you've got money put away, you're in a cycle and a habit of putting money away, saving money. Your savings are growing generally every single month because your income exceeds your spending and you're being responsible. And maybe you've gotten rid of some emotional habits around why you aren't or haven't been that way in the past. Then you're probably ready for whole life. And especially if you've got a business and you've got a lot of cash flow running through your hands and you're wanting more financial efficiency. Hey, I got, $250,000 running through my hands, through my businesses. Like I want to make it go further. Probably at a good point to where let's start talking about whole life. Let's see if there's a way
Yep.
that that tool can make you even more efficient with those dollars, because more than likely it is. So that's one of the big things that, I can think through my mind, multiple people that they've come to us like, oh, we saw your presentation, Jeff. We want to do infinite banking. It's like, great, let's examine where you're at. And we look at it and we're like, guys, you're not
Yeah.
ready for that. You're just not there yet. The income's not there. Maybe the debt is too much, or the way you're communicating to me, you're just not ready for it. And we say, time out. Let's revisit this in a year, maybe 2 or 3 years. Like, focus on paying down your debt. Call us back in 3 years. We'll see where you're at. Stuff like that is very, 100%. Very important. So,
yeah, I agree, Jeff. So I've gone back and forth on this aspect of whether or not whole life is for everybody. And here's how I think about it now is I do think everybody should have a whole life policy at some point. Maybe not right now, but when you're ready at that point and it makes sense, yes. Because here's the thing. I mean, it's one of those tools, first off, it's called the and asset for a reason. So people think that I can either invest my money or do whole life insurance, and that's not true. We can do both because we have access to the cash value. I do this in my life right now, with my private money lending. I borrow from my policy and then I lend it out, right? So you can do both. You can have whole life and investments. But I do just, the more I go down this rabbit hole, the more conversations I have with people. I was setting up a policy. We were doing an illustration on a client's 3-year-old child. I mean, like, the numbers are just unbelievable, and just how powerful this thing is going to be for her entire life. Like, it's going to be there for every major life event throughout her entire life. And I'm just thinking to myself, why doesn't everybody have this? Now, again, not everybody's right for something or ready for something like the infinite banking concept, or like you alluded to earlier, you're putting $50 a month or $100 a month into this thing. It's just not going to move the needle. You're not capitalizing it enough. You have an income and cash flow problem right now. You don't have, well, I guess we could argue that maybe there's a financial efficiency problem as well, but the next phase is like the first step is increase income and cash flow. Then we're going to be far more efficient with our money by placing it into a vehicle like whole life. And now we're going to deploy that capital, right? We follow that process, but a lot of times people are skipping ahead and they're getting excited about the strategy, the product, whatever. But you're not in a strong enough financial position in order to get all of the benefits. The good news is, as you alluded to and mentioned already, Jeff, is that there's other things you can do right now, like the convertible term policy, to lock in that insurability. You can convert that into a whole life policy later on down the road after you've cleaned up your income, cleaned up the debt a little bit. And so, yeah, it's I think it absolutely is for everybody, just not for everybody right now. Where, because everybody's situation is a little bit different. Sometimes people do need to fix their income first, then do something like infinite banking. Some people need to clean up the debt. Some people need to shift their mindset around money as well. Because I was talking about this in a video I was doing earlier. I was actually talking about the risks of taking policy loans from your whole life policies. And at the end, I basically summarized it saying that you are the greatest risk to the policy, because the policy is going to do what it's meant to do, whether you use it or not. It's going to get that guaranteed growth, most likely going to get dividends, you're going to have the death benefit, whatever. But if you start screwing around with policy loans and then dumping it into, like, the latest cryptocurrency project or something like that, and you're taking vacations with it, not paying back the policy loans, well, you haven't had a big enough paradigm shift financially around money, that is, to be responsible, to be basically to be ready for something like this, because it takes a certain level of financial responsibility and maturity to do these things successfully. Otherwise, you could end up in a far worse position than you were before you started it, right? So, yeah, I think that's really important. I do think I can make the argument that whole life is definitely for everybody because of how many benefits it provides. It's just not right for everybody right now.
Mm-hmm. Yeah, I think it's well said. Yeah, I think I've come to a very similar conclusion as well. I think it's one of those things, a phrase I'd heard back in a lot of my personal development, where, if somebody is going for goals and dreams, and you're is like maybe a mentor to them or a friend, like, I believe you can do that. Like, there's a capacity to do that, but I don't necessarily know that you will do that. And I think the same thing holds true with policy. I think it's good for everybody if they get to the place to where they're aligned with being able to manage it and stuff like that.
What's up, my fellow wealth creator? Thank you so much for checking out this clip from the Millennial Wealth Creator podcast. If you'd like to watch the full podcast, there will be a link down below in the description. Make sure to also check out the additional tools, training, resources that I have in the description as well, just to help you along your journey. Thanks again for checking out the clip, and we'll see you in the next one.